Well, hello folks out there in YouTube land. Got a big show lined up for you, and let's get right on into it. All right, let's pull up the screen. Oh yes, Aitx. Looks like they're going to get into autonomous deliveries. And it looks like they're going to be using the Romeo technology that they've developed to help them do this. So this is pretty interesting. And I like these units. They're cool looking. They're sort of retro. And I like that. I think that'll make people comfortable. I know he's been talking about some people wanted to make it look more high tech, but I think a lot of people will like this look. It's sort of got that old English look of like a cab or something. I think it's what he's trying to go for here, and I like that look. I think it's pretty cool. We're going to talk about that. We're going to talk about how they're going to pay for that. We're going to talk about dilution, and we're going to talk about penny stocks in general right now in the OTC. All right, folks, if you're in the OTC and you're investing, you obviously probably are, and you're watching this video. Right now, penny stocks, OTC is tough. It really is. We've got some sweeping headwinds that are affecting all those stocks. Now, this stock, like many others, they're dealing with dilution as well, so that's yet another headwind. But the two big macro issues that all of these high-risk stocks are dealing with is this. That's right. Now, you've got inflation, which first we were told was transitory, which was ridiculous. Then we were told it was 4.8% or something, which is, again, ridiculous. Now they're saying it's 6.8. Again, that's not right. It's probably somewhere in the neighborhood of 10 to 12 in reality. And I base that on going to stores when I go to the grocery store or buy anything at a restaurant or rent a car, anything like that. It's way up. It's not 6 or 7%, and you know that as well. The problem with inflation and penny stocks is that most penny stocks aren't making any money. So you're talking about future valuations, the future value of profits, for example. Well, if there's tons of inflation like we have right now, that devalues that profit in the future. So if you think Aitx or if you think any of the penny stocks are going to make money in the future, and I particularly think they will, that's not worth as much if we're looking at 6, 7, 8, 9, 10% inflation. So that's one reason why these stocks suffer in an inflation environment. So the other problem that we're dealing with is this Rona, and I can't say the name of it or YouTube will get all upset. So it's we've got two versions. This one's causing havoc. Then you've got this new one, which is absolutely all over the place, and that affects everything because that brings in our infamous uncertainty. And again, high-risk stocks hate uncertainty. The market hates it. It just makes people uncomfortable, so they flock back to the stocks that are more comfortable, like your Apple and Facebook and Microsoft and Walmart and AT&T and anything that's comfortable. They flock back to that. So that's why we're not having as much volume in the OTC markets. And we're going to get into the positives with Aitx here in a minute. I'm just finishing up on what we're dealing with and the risk factors right now and the headwinds. And the other one that we're dealing with Aitx, and this is most penny stocks, you know, if we're being honest with each other, is this guy right here, Mr. Dilution. And it scares the crap out of people because the reality is it's a mathematical problem because when you dilute a company, obviously you're adding more shares that devalues the shares of the common shareholders that are currently in Aitx or any other OTC stock. So dilution upsets people, and for a legitimate reason, because you can't really argue with mathematics. You can try, or you can go bump your head against a wall. It's just kind of is what it is. Now we're going to get into the positives of Aitx, and there's a bunch of those. And we're going to start out with, of course, he announced the autonomous deliveries. Well, I think it's pretty interesting. They might, they've already spent a lot of money on this technology with Romeo and the things they do with it. So it kind of makes sense they would move into this category. And this has a large addressable market, so it's pretty interesting they're getting into this. And here's Steve talking about it.
CEO, good morning, everybody. I'm going to kick off with the fact that I finally was able to reveal that we are going to use Romeo, Rad M, and Rad G technology to bring to market a delivery robot. And more information on that, of course, is going to be get shared over the course of the year. I expect to have paying customers by the end of calendar year 2022. And it's going to be very interesting. You know, we're going up against companies like Neuro NURO, a few other players that have funded a few different ways. Of course, we're funded through the OTC. It's going to be an interesting situation. Anyway, we'll see what partnerships we can create. We'll see if any of the multiple super large companies that asked us to create this come through with deals and partnerships and sales. And, listen, as always, stay tuned.
All right, so I find that pretty interesting. Like I say, they're going to have to raise money for that, so we're going to get into that here in a moment. But they're going to try to get in with some pretty big players. Now, understand, Aitx is not starting from the ground floor on this. They've already spent a lot of money on the technology with Romeo, because Romeo is kind of that way. It's not a delivery unit, but a lot of the technology, I'm confident, overlaps. And when you look at this part right here, I think you'll understand it.
I expect that this month we'll have a unit in Texas and another in California. And speaking of California, our casino client, our Casino Romeo client, is in Northern California, so I guess California's going to have 2 units. And folks that are up north can go visit it at the casino, and folks that are in the south can visit it at the amusement park.
All right, so as you can see, that makes a lot of sense that they would overlap those, because basically that's kind of what this machine is doing. The Romeo, in a way, it's not delivering anything, it's just kind of scanning and making sure that things are safe and keeping eyes on everything. So similar technologies in my mind, and you look at that Romeo rolling around there, it wouldn't be hard to see that with those little cabs going around delivering things. So that's makes a lot of sense that those two would combine. One of the other interesting things they're working on is the Rad Light My Way. I really like the Rad Light My Way. I think it makes a lot of sense, and I think there's a lot of people that need it, because like I say, if you're leaving a large building at night, it can be a little bit creepy out there, and especially with the crime that's going on right now. And this Rad Light My Way could be a real useful product.
Only solution of its kind, and it's crazy exciting for us. Of course, with the push of a button on the Rad Light My Way app, Rad units come alive. They scare off and engage bad guys, so to speak. They let the good folks know what's happening, gives them that knowledge and that situational intelligence, alerts remote monitoring services, remote staff. There's a lot of things at an incredible value. I think Rad Light My Way will be huge.
So that's pretty cool. I can see a real good future for that, and I think it's very useful. And I think that could be, that's one of the many products that they're working on, and they have a lot of great products. So like I say, I started this video out with the negatives. Now I'm getting into the positives, and there's quite a few. Here's another one that interests me.
But I expect by the end of January, I will confirm that we are ordering 1,000 Rosa 3.0 shells and going into a standard serial production schedule for the devices, which is a huge jump for any company to go into that stage. It's a big, big, big deal. Of course, we're super excited. I'm excited about the things that Rosas do for customers. All the stories that we get, all the feedback we get of Rosa solving customer problems. So that's a big, big, big deal for 2022. I expect, maybe hopefully hundreds of units deployed throughout the year, maybe 1,000. I don't know. We don't know. But we're going to try.
So again, that looks pretty good there. Now we're expecting the third quarter to I think it'll probably come out in January, based on what I've seen from the past. And if you'll remember, their quarters are a little bit different than ours, what we're used to here. At end of year, theirs ends February 28th, I believe. So they've finished their third quarter. We'll be getting those numbers in January. And then the fourth quarter will be December, January, February, and we'll get those probably in April. So we're about 2 months off of what you're probably used to. But he did say, based on sales that they've had, that he's thinking they're going to be just shy of $1 million in revenue, which would be a huge uptick from what they've done in the past. It would be a record, and it'd be fantastic. Now, realize they're still going to be losing money. This company's going to probably lose money for a couple of years. But to see that revenue jump like that will be a really good sign and probably a positive catalyst. we'll see how that plays out. Till we actually see the numbers, we don't know, but I can't imagine he'd come out and say just shy of $1 million if that wasn't going to be the case. So I'm assuming like 900,000. Now let's take a look at where we are with our shares. All right, we're sitting at $4,433,000,000. So we have had some dilution, and they've been raising some money, and it appears they've raised probably a little over $10 million, I would have to guess. Now, I don't know if there's any preferred shares in that. We had that issue with the Series F shares several months ago, and I'm assuming most of this will be going to their balance sheet. So we'll see how that rolls. Now, to do this delivery system, they've come out with an article, and let's take a look at that. And here's where they've updated their S3. And of course, there's the picture of the delivery units they'll be working on. And it goes through and it talks about it, kind of the things we just saw. And in order to pay for that, it says to help fund the company's growth, the company will continue to raise capital under its current S3 registration. The company is allocating 400 million existing shares for this phase, communicating our plans and purpose is a hallmark of Aitx. So 400 million shares are going to be put up for sale, and let's take a look at that. And here's where it discusses it. The issuance of sale of 400 million shares of common stock. They'll be selling those to GHS Investments, and I believe the way they've been doing that on the S3 is 90 cents on the dollar. So this company will pay 90 cents on the dollar, resell them, and make their 10% or more, depending on how the stock acts. But that's how that's pretty much been set up. So we know 400 million shares, and there where it talks about it. And here's the use of proceeds. Talks about payment of debt to contribute to an improvement in the company's balance sheet, expansion of the company's electrical engineering development. It goes down through all that autonomous remote services. That's obviously the deliveries, et cetera. So if you want to take a look at that, you know, it's all there of what they plan on doing with it. So when you add 400 million, they're planning on selling, that's going to put them at 4.83 billion. And that's getting real close to that 5 billion. So that's a little bit concerning, because if it hits there, that's going to be an issue. I'm sure Steve will speak to that at some point, but that is something to keep an eye on. The stock itself, as we look here on the screen, has pulled all the way down to 0.015, and I've been trying to swing trade this thing. Initially, I had bought it at 5 cents, and it pulled down, and then it popped back up, and I repositioned. I actually sold out at a very small loss. And then I rebought down here at this base of support at 2.5 that I thought it would hold. But like I say, with this new version of the Rona, that's kind of just pushed all the OTCs down. And I think this is more about that than it is dilution, because they hadn't really sold a whole lot in the last week or two, but it's still going down. And that's really, if you own OTC stocks, you've seen a lot of that. So I think that's more about that. I'm hoping for an uptick. I might even reposition again if it goes back up to the 2.5. It depends. I am concerned about dilution, of course, but again, they've got a lot of positive catalysts coming out over the next 12 months. So this has been a tricky stock. It just has been. There's a lot of positives, and then there's the negatives. Let's take a look at the short volume on it. Now, the short volume on AITX right now is only 13%, which that's not very high for an OTC stock. So it sounds like a lot of people are probably a little bit nervous about shorting this stock because it has pulled down so much. And I really can't blame them. Down here, there's not a lot of meat on the bone for a short to make it a whole lot of money. So we'll see what happens. I would like to see it rebound to at least this 2.5. But, you know, I think it has a lot to do with what happens with the Rona. I really do. And I also want to tell you, I actually have been in communication with Steve Reinhardt's the CEO. I'd had several people reach out to me that said he wanted to speak with me. We have not actually spoken on the telephone or through Zoom. He's requested a Zoom call. I've never done a Zoom before. So I did download the app, and I think I know how to do it now. He's having to confirm that I'm the real guy. And I understand that, because there's a lot of FUD out there and a lot of people trying to mess with him. And he gets a lot of negativity as a CEO of an OTC stock. You know, that's pretty typical, and he gets a lot of it. But I am real. And we actually tried to set up a time, but I had a doctor's appointment. I have had a bad back. I mean, a bad one. I was having a lot of trouble. I've been working on my swing speed in golf. I like to play golf, and I was trying to get my swing speed up, and I think I irritated my back and got some inflammation in it. But the doctor helped me out, got me some prednisone, and got me squared away, and I'm in no pain now. But that was the day he was trying to set up a Zoom call with me, and there was just no way I could do it. I could barely walk at the time. But anyway, I think we'll get together and talk a little bit, probably through Zoom or whatever. And you know, I don't know what all questions he can actually answer as a CEO of a publicly traded company, but you know, I'll try to get some information that might be useful, and he's open to it, obviously. So, Steve, I'm real. I really am. So don't worry, I'm not trying to fool you or anything. I think his people have probably warned him to be careful when people send him emails or whatever. And here's one of his assistants that he works with.
Danger, Will Robinson. Danger. No, Will Robinson. Danger.
That's right. That assistant's very careful and cautious, and that's good. So, danger, Will Robinson. But, you know, he'll find out I'm for real. Anyway, that's AITX today. I wanted to go over the positives and negatives, and there's a lot on both sides, but hopefully those two macro issues will clear up over time. And as far as the dilution is concerned, I'm just going to have to watch that. You know, that's one of those things that it's just the reality of OTC stocks. You've got to watch the dilution. But if you like this content, be sure to hit that like button. Lets me know to continue to cover AITX. And if you haven't subscribed, hit that subscribe button. Give the channel a chance. I'd certainly appreciate it. And I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.